Hey guys, today is July the 18th of 2021, and I wanted to go over gold futures using WGAN price and time technical analysis. Let's get into it. This is a big picture I have. This is gold futures going back to 1976. As you can see, the trend is up. And if I add an Elliott wave count, 1, 2, took a couple of years. This is 3, 4, and some may say, well, 5 is here. I think 5 will be even higher. I have a measured move target of 27.14, and it could probably even go higher. So just to keep it more realistic, that's the target I have. If we go into the monthly chart, and add our Gann waves. Let's open this up. This is to the recent high, 2089. And we do our Gann waves, you can see that we have 3 and then 4, total of 7. And now we have 3 up. Now the question is the 4-7 going to be up or is it going to be down? That is a question. So we do a lot, if we do an alternative count, and the alternative count is giving the reaction point a space and then recounting. So that would be 1, 2, 3, reaction point December, 1, 2, 3, 4, reaction point May, and then 1, 2, 3 will be August. And then reaction point 7, and then October do the 4. So that's the alternative count. So I just have this one now to see. There's a lot showing for the alternative count for August as a swing high. I'm going to show you why. But I'm going to stick with this one unless, it changes. So I figure I'd show you that. Let's get into minimize all this. The big master chart. The way I'm looking at gold, this is the battle zone right here. Let's actually make this even bigger. I got data from 2001. As you can see, the trend is up. Put some stuff here. Trend lines. These are resistance levels. See? Pierce through it at 1916. Important, so I put it up there. There's some kind of support right here. I'm noticing these lines are not really that straight. And there's that top. 1676, 1916, 2063. Get all that out. Keep this clean. You leave the trend lines. Some dates that are coming up. And now let's get closer. So this is the range. So this is what I'm looking at. Interesting date next week, the 22nd, is unemployment claims. And then on the 28th, FOMC. Those are big dates. Keep on your radar. Because that's going to move gold. Hopefully it moves gold, but I think it will. First thing we're going to start is our cycles. annual cycle, solar cycle. As you can see, it's showing that a possible dip could be coming, and it looks like it's coming into FOMC, and then prices shoot up all the way to September, around there. So this is for the bears. There's going to be a little retracement, and then it continues going up. Next cycle is the spectrum analysis. As you can see, this like it's red or brown. Following prices is the smaller cycle, and that's pointing lower into August. So this is a little like a correction. So this is more for the bears if you want to be short going into August. If you do a composite of all those cycles I picked, there was like 4. This is what it's showing, that a correction is coming into August. So couple that with the cycle, there's a divergence there. One goes in a little deeper, but then it goes up. And it all depends if this plays out. I'm just showing you what I'm seeing, what the models are showing. Let's get that out. And then there's a turbo cycle, says also a little correction, which kind of lines up with the annual. And the model composite doesn't show that. It shows it a little later. So there's like already 2 cycles that are, in sync, the turbo and the annual. Let's go into seasonality. Trying to get the cycles out of the way. You guys know this is the decimal and the annual together. This is the annual. And then this is the mid and fast, the red and the green. So what they're showing is that it's all going up when one tops out. So this is the one that's the oddball, the seasonal. If you add in the annual cycle, here you can see that there's a dip here, but they all get in sync, and one tops out in September. They all top out like in August. That's why I was thinking about the alternative count on the Gann wave. With the alternative count, it says something for like a pivot turn in August. And the seasonals are confirming it. A little bit of the annual. So what is the seasonals telling us? With the quant, it's saying that 93.3% from August here, which is probably right after the FOMC, the 31st, but that's a Saturday. Prices could possibly continue going higher. Pretty much for like a whole full week. And then from here, on August, maybe like the first week, all the way to September. A lot of it is pointing for price action going higher. I want to show you something interesting. I don't know if I've showed this before. This is one of Gann's techniques. Take 10 years from where you're at and see what price action did in the past and see if it averages out. Price action could average out into the future. And that's an estimation, like a probability. So if we do 10 years in the past, you can see that price action dipped here and then shot up. The annual cycle is almost doing that, but this one kind of was like a short little dip, but then they continue going higher. Tops out here in August, September, possible tops. If you take 20 years, there's another set of cycles that Gann used. We have the opposite effect, kind of more in sync with this, where there's a correction to like the end of July, and then it explodes up. That nice move up to here, not going to go straight up in a line, but it corrects and then it shoots up even higher. So take it as you may. what I'm looking at is if it corrects, it could be a buying opportunity. So if you're patient, you'll wait for that correction, the unemployments to come out. Boom, FOMC, their chatter and their BS and inflation chatter and all that. And once the end of July or somewhere around there, the last week, any buying signal or bullish, or volume, anything you see that's just kind of like moving up with velocity, that's when, in my opinion, I would consider getting in and see if this thing would ride up here. So those are my thoughts. Let me take that out. I just figured I'd show you that. This is one of the techniques I use. As you can see, the annual on the seasonal is very different from the annual on the astronomy cycle, which is a solar one. You can see that here there's a dip, but this one just showing, but this is like showing you the main direction. So it's up, it's up. Quanta saying it's up. There's a correction. So I just wanted, just keep you focused on that. There's a possible that there's a correction coming, but then everything is pointing up. The composite, same thing. If there's a correction, the only thing is the composite, it shows even deeper. That's something to consider in your strategy. Annual decimal pointing up. Mid and fast, all in sync. Let's get that out of the way. Just figured I'd show you that too. And then lastly, see if we could close this up. Don't want to make this video too long. Let's get this annual cycle. Well, similarities. So there's this similarity of price action that is pointing up into August the 20th. And that one is based off similar months in a year. As you can see the price action, let's get a little closer so we can kind of see this. Going up. There's another similarity. And this one is based off similar year. You can see that it pulls back down. It kind of goes sideways and then it goes up. So it goes into effect the correction that's coming into maybe these news events. And then it just kind of goes up. And then lastly is the no filter, just the best similarity. And both of them are going up. So there's two that's going up and one that's going down. So those are the probabilities that we have that chances are it could go down, then go up, or just go straight up. I wish it was one of those things where it'd be like, yeah, we're just going up. But there's a lot of mixed things happening. Neural net, got a lot of good response from people that are liking the neural net. Neural net is saying something on the 30th. Now, the good thing about neural net, from what I understand and how I'm using it, is that sometimes it's good for direction. So chances are, this is how your mind have to look at this with the computer algorithm. The chances are price action could continue going up, and then maybe neural net tells you the swing, that's what possible swing turn is coming, and then it goes down, or that it plays out that there's a correction coming and that the neural net is picking a possible turn, but it doesn't know what direction it is. So maybe we're going down and neural net's going up. And it kind of goes in sync with the other cycles, that there's a correction coming, and then somewhere on the 30th, this one is saying on the 30th, and then we go up. So that's how I look at, neural net now. So you can see neural net picked a possible turning point here. It took a couple of days to play out, and then it came down. Neural net picked up possible swing low here, and it did a little flush. Sometimes it picks the low, like right here. But sometimes it's just a couple of days off, and now we went up. So this could be the same thing, where maybe it could continue going up. And it's set here, and as you can see, it took maybe maybe a week in some days, and then it started turning. So that's another possibility too. We could go up, and we could keep going up, and somewhere around August, the first week, then we turn. So that's a possibility with the neural net. The Bradley model, possible turning points. You can see there's one here, and there's one here, 18, and the 31st. I wanted to show something else too. I forgot. This is the weekly and the daily. You can see that price action now is in the cloud. So if we were to take a trade here, we have to know that it's going to get wild. Through the years of trading with the Ichimoku cloud, when price action in the weekly and in the daily, they're in the cloud, it's just wild rock and roll price action. Volatility to the sky. If if you are less risky, you don't want to take that much risk, wait till the price action gets out of the cloud and then trades out of it in the direction that you want it to go, then trade. But when you have both of them in the cloud, this kind of stuff could give you a heart attack if you're not ready for it. Okay, so I just want to warn you. That's why you see this these spikes. You see, we hit the top of the linear regression channel. This is the value area low, which is at 1774. The point of control is right here, 1876, which is in line right here with the cloud. There's a strong resistance level we have to get above, and the linear regression channel. You got the Tom D. Mark 9th candle right here indicated, so it was a possible turning point, and it happened. And now we're in the battle zone right here. The last 4 weeks where volume was very strong, positive, and we have the MACD now. It's about to turn positive, but it all depends. We're battling with all the moving averages right here, so this is just a cluster mess right here. On the daily is the same thing, but the value area low is right here, 1776, in sync here. Point of control is 1864, and the value area high is this swing top right here. So, and the linear regressions are pointing down. So if we're going to continue pushing up, and we're battling the 200 on the daily, we kind of pulled back. But we got a couple of days before we can get out of the cloud. And if it pushes lower, then that's where price action wants to go. As you can see that this week that just passed, it was a negative week. And it looks like maybe it could possibly get a sell signal on the MACD on the daily. So that means that maybe this correction is coming, FOMC, and then maybe shoot up. So that all depends, to be seen. Let's get this out. And then the last things I want to go over is the battle zone. This is what I call the battle zone, because this is what Gann said about trading the range. You just got to pick a little area where is the range. So this is our high, and this is our low, and this is where price action is hovering. Using the Fourier technique, you can see that price action is projecting lower, which is in sync with the annual. So a correction could be coming from these swing points from here to here. Using another swing point from here to here, you can see that there is a correction coming also. The projection lines are saying it, and then a pop. The Gann square. Look at this. You take the Gann square and take the range. Take this range from right here to right here, and then project that out into the future. You can see that we were hitting resistance right there. We hit resistance right there, fell down into this angle, just kind of chopped around, came up, hit it. And now this angle is kind of your support. So this is more fractal. You get the 1/4 overlay. This is going to be a strong support right here, somewhere around 1750-ish. You can see it. You do the 1/6 overlay. There's one coming up around 1800. And if you do the 1/8, even more fractal, it just broke the support and it's coming here between that 1750 and this angle that's coming up. We'll probably give it support, or it may just continue pushing lower and maybe come down to this area, 17, maybe 65 around there, FOMC, or maybe even hit this angle and then project higher. That remains to be seen. Fib level, we hit the 61.8 up here, fail. We're holding the 23, and now we're dancing around the 38.2. You're coming up to an extension right here of the 61.8 right here next week on Monday. Monthly bar is positive, and then the weekly, you got 3 weekly positive. So if it continues going higher, we'll see. The harmonics, you can see that right here. Let's just get a little closer. There's a cluster of strong indication of something happening on the 28th. You got all of them lining up here. The 2 wing pattern, this is just from right here to here. So we're doing measured move. If we're going to go higher, I can see a possibility of 1991. This is called the the measured move technique. I learned from Michael S. Jenkins. So you could pull back, and you know, we could continue to possibly somewhere around here. If it happens, the measured move technique, it may not. But I just have it in there just to see if we ever get up there, then that could be a place to lock in profits. That's the saw support, 1816. We're kind of battling that. Possible target could be that 1958 if we continue going higher. This is advanced support. Another one, if we flush down, keep an eye on 1747. That could be a good support. And then put a buy signal at 1831 and possible target, which lines up with the measured move, 1987. Nothing there. Pitchfork, you can see that we're battling this right here, an angle. Having resistance right now. Pitchfork to the top. This is the 50% right here, which we failed. And now we're right here. If we push lower, this area with the pitchfork could be a good support. If it happens in FOMC a couple of days later or next week and it shoots up, then we need to get moving and definitely above the pitchfork angle. Let's see. I got some channels I want to show you. So these are good, strong channels, buying opportunities if they ever get down there. So I just have them there as channels. Here's another channel. So there's 2 that I have. And this is a downward channel. So downward channel meaning I need to get above to go bullish, and definitely out of the cloud, somewhere around here, take out this top, 1961. So these are the channels I have. Almost like action reaction lines if you look at it. Let's see what else. Parallel lines. Spiral. You can see that right here. We're at support. Found support here. This is just other stuff I just look at. I don't even know if you need to know all this stuff. But pretty much, this is what I see. If we push lower, you just got to wait. Unemployment comes out. FOMC. If it's still selling, once it turns and finds a bottom, you get your whatever signal you use to go long. A lot of the cycles and everything else, the forecasting techniques are showing higher prices. If it continues going higher, and all these days come, it's going to get volatile, it's going to get wild. So I'm leaning maybe a correction, buy the dip, and then ride the wave up. So that's my plan. Hopefully you like this video. I'll keep you posted on my thoughts, but it'll be interesting to see how gold reacts to all this news and all this data. And I know there's a lot of manipulation. You know, FOMC policy could just pop the dollar and crush gold. So I know it's all that in factor. So I'm just kind of going with the indicators and what they're saying to me, what could be probability, and just kind of see it kind of play out. And if it plays out, just put a trade in there and just see what happens. All right. I'll see you again.